Good evening. This is Giuseppe Basile. I'm the analyst and trader. You can find at the blog fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening. Today is Wednesday, June the 26th, 2013, and this is a brief review, and it's my daily update for the four market I follow: the Euro FX currency futures, the dollar index futures, the US dollar versus the Canadian dollar forex pair, and the S&P500, the mini. Now let's start from the daily chart of the Euro FX currency futures, which is what you see on the screen. Those who follow me know that I've been following this participation on the upside, which can be identified by these trades from July last year lows to February this year, February 2013 highs, and we saw this participation on the upside April and mid of May. Now, what I was initially anticipating was a continuation higher, now with a bounce at this 132.10 level, so an extension higher. But of course, market did what he had to do, and we can never say. And secondly, the second level of support I was looking for was this 130.90, but market price dynamics negated that as well. And then today we had this important development. We actually pierced this 130.08 level. So this is an important information, because it's saying that longs on the daily chart at least are not that sure as they were before. So when this happens, when we had a violation, I want to show you this. We had a violation of shorts first, and we saw this in at the beginning of June, and then this violation of shorts was followed by a violation of longs, as we can see here, because longs were not able to sustain these 131.10 levels. And when that happens, is an indication of market indecision. So what I'd like to see here, it's a retracement. If we have to continue lower, we have to remember that we are going to meet this area of support starting in the 129.10 area, okay? But it is important how we get there, and what is the price dynamics on the daily chart, in order to understand what could happen. If we move lower without a bounce from here into this 120.10, we will get again participation on the weekly time frame and get again a push higher. On the other side, if shorts trade before longs at the 129.10 trade, then we would actually have some power on the bears side, so on the short side. And I'm looking to sell a specific level now, the 131.6. It's going to be an extension, not a traditional, because of this huge move lower, which I consider, which I interpret like the market wants to keep moving in extensions and not in traditional. But I want to be safe as usual. Risk management is always my first concern, and I will have a stop above 132.60. So this is going to be the trade that trade plan I'm going to provide you with an entry in the 131.55-56 and a stop 100 pips above. But this 100 pip is not coming out of thin air. It's the stop level for shorts. So I believe if we get that retraced, then we could actually then continue lower. And as you can see here, there will be the 20-day moving average offering resistance. Moving to the dollar index, clearly that important event we had today can clearly be seen also on the dollar index. So this was a violation of the 61.8% line, 83.20, Look, a violation of this line is always a very good news, because it means that the trend has changed in the time frame you're looking at. So one door slams, another door opens, and that's what we are looking at. And that's what we want to see, so we can actually get new opportunities. And we have to wait a little bit, but again, I believe that this market has the potential to reverse, the dollar index to reverse on above this 82.20 level. Moving to the US dollar versus the Canadian dollar, I showed you last week the violation in the 4-hour chart, and that was an indication to us that the highs were in. Now I didn't have a clear and clean trading plan for the for this market. Actually, the only thing we could have done is sell lows and put stop to highs. I want to remind you that the last sequence, the second last sequence of this measured move on the 4-hour chart that you see on the screen was traced from these highs to the June 21st highs, and as we saw, and as we see here, we had this participation in the 104.40 level, which will press into 105.10 and 105.40 level here. And not surprisingly, we saw selling coming from these levels here, and again yesterday the 25th coming from exactly the second target here, which demonstrates that actually profit taking is being active at those levels. So the plan could have been to sell, as I suggested, to sell price below this 105.13, so 12, and then put a stop at highs. But we got this second test, and I wanted to risk a basket setup here. So what we can do, actually, this market has now the potential to move into that 104 level, which I've indicated yesterday. Anyway, congratulations to those who managed to take the trade anyway. And we are heading this towards this 104 area, and I think we can get a bounce there, and then maybe we will see how this market will behave, whether it will retrace all the move lower or will retrace into this 104, and then we could get a piece of the continuation lower, taking a short at 104.70 area, or maybe using the 4-hour confirmation breakout, and I'll provide you with this setup if you keep following me if you keep following my newsletter. And to conclude, the S&P500, we had this counter trend move. So far I only see that as a counter trend move. Of course, you can if you look hard enough, you'll find levels that support that print a 50% level here, but you know, in the bigger time frames, daily and weekly, there is no support from program trading in this move. It's something very similar to what we saw here and what we saw again here during the mid of June. So we have to be very careful about making consideration about this market. And in my last review, I left you with the two levels or areas to watch. One would be the 16.16 or 16.15 up to the 16.32, which is our current stop. And not surprisingly, yesterday we had the market responding right to that 16.01 level. As you can see, price went to that level and then closed well below it at the 15.95. So it closed actually 6 points below that level. So where we can go, actually, we can reverse from this level and keep moving lower, in which case we will add to our short using the 4 confirmation breakout, or we could see this price actually reaching this confluence between the 20-day and the 50-day moving average, and even get to the 1616, and actually it could continue higher as well. That's why our stop is currently at the 1632. Now I want to show you something, just an observation here. The green line is the 50-day moving average, and the blue line is the 20-day moving average, and I just want to show you this behavior. It's not something that we can actually use for our trading, but we can use to set our expectations on the market, and just get an idea of where the market will go. Every time we have a crossover of the quickest SMA, we see that after 1 or 2 days we get a correction in the opposite direction. So in this case we had 20 moving average crossing on the upside the 15-day moving average, but still we get this move lower, and again we get let's say we get this crossing down below, and what happens is that we get this move higher, and you will find a lot of resistances here. So we are in a situation in which the 20 days is about to cross below the 50, and maybe we have already anticipated this move higher, and now we will get, as we get the crossover, we'll get the continuation lower, but we never know what the market can bring to us. So what I do is I for now hope that this video was interesting. I think we have a very good opportunity in the euro setting up, which could bring us 131.60 to 129.10, could bring us 250 pips here, with a risk which is about 50 pips, so 125 reward to risk trade, which is the kind of trades we are looking for. So thank you very much for following this video. I hope this video is useful for your trading. Be careful, and I talk to you tomorrow. Thank you very much. Have a great day. Bye bye.